Money. It's the number one concern of every brand new real estate investor. How will I have the money to fund my real estate deal if I find a good deal? The reason we think that is because the term real estate investor has the term investing in it. So as an investor, you think you have to have money to invest in those properties. The truth is, you do have to have money, but it doesn't have to be your own money. In this video, I want to show you exactly how I built a $5 million private lender base to get my business started, and we still use those people to this day. My name is Glenn Schwarm. My wife Amber and I have flipped over 1,000 houses, and we still currently flip over 100 houses a year in the upstate New York area, and we live on the beach in Florida. So we've built a business that operates without our daily involvement in the flipping houses and rental houses arena. So some of you watching may not have any experience with real estate investing, and you might be saying to yourself, so what is a private lender? A private lender is just strictly an individual who loans you money on a piece of property. Essentially, they become the bank, but they're not savvy investors typically. There are savvy investors as private lenders, but I'm going to encourage you to start by looking in your circle of influence. Now, you might say, but Glenn, I don't know anybody that has that much money to invest in real estate. And I would argue and say, you probably do. You just don't know how to ask them or where to look. The next question you might be saying is, well, why do I want private lenders? And I can tell you from a lot of experience, private lenders are by far the easiest source of money that you'll ever have as a real estate investor. And the more private lenders that you have on your team, the faster you can grow and scale your real estate investing business. So why is it a good deal? Number one, it's cheaper. Now, banks and hard money lenders, they may loan you money. They're going to have credit checks, lots of background checks. They're going to have financial statements. They're going to want a lot of information and an application process. A private lender wants to know one thing. Who are you and what's the deal I'm investing on? And how am I protected? And we'll talk about that more in this video. There's a lot of people that want to be real estate investors. They have money, but they have no idea how to do it. They don't have the time, and they don't want to do the legwork that you're going to do as the actual investor with boots on the ground. So they can be what's called a passive investor. You see, if someone loans you $100,000 on a piece of property, and you're going to pay them, let's just say, a 10% return, they can make $10,000 a year interest on that money while you do all the headache work. So they can become a passive investor as a real estate investor, allowing you to fuel your investments. So it's a really good deal for them as well. As a matter of fact, when you go through lenders that are savvy investors, they're going to charge you points. You might say, Glenn, what's a point? Point is 1% of the loan. So for example, if you were to borrow $100,000 and the lender said, we're going to charge you 2 points, well, that means you'll pay $2,000 as a base fee before any interest is paid, and that'll actually happen before you take out the money. So it can be expensive to go through hard money lenders that want to charge points. And typically savvy investors will charge a higher interest rate than someone who's a private lender. So who is a private lender? Well, a private lender, again, is not an institutional lender or a professional savvy real estate hard money lender. These are people that you know that have money that they'd like to invest elsewhere. There's a lot of people that don't want to be in the stock market roller coaster any longer. There's a lot of people that also have money on the sidelines they're just not sure what to do with. They have no idea where to invest, and they don't even know the first thing about real estate investing, but they know they'd like to be involved in it. Your job is to find those people. Now, a little bit later in this video, I'm going to teach you exactly how to do that, but now let me tell you about where they have money, because you may have to educate them and make them aware of how much money they actually have that they could invest as a real estate investor, because some people, believe it or not, don't know it, and here's why. Our very first investor we ever had was a woman named Janie. Janie used to work out at the gym with Amber on a regular basis. When we very first started our business, we actually went to a bank for our first 2 loans. However, back in 2008, the bank pulled those loan programs from all investors and they stopped lending. All of a sudden, we found ourselves with 2 houses under contract to purchase, and our lending source disappeared. That was a very, very scary moment for Amber and I, because we were all in and we had to make this work. This was our only source of income, so we were terrified. So I started asking around if anybody had money they wanted to lend. And I didn't know how to ask the question the right way. But finally it got around to our friend at the gym, and Amber said, boy, we need to have about $100,000 to buy this one house. And if we could do that, we could flip the house and make some money. We're happy to pay a high interest rate. And her response was, boy, I'd love to do it. We just don't have any money sitting around. So she came back one day, and as Amber was telling me the story, I said, wait a minute, they have a beautiful home. I said, I know they do a lot of work themselves around their home, so their do-it-yourself value is probably gone up. They've driven their equity up. So I reached back to her and said, Janie, I have a question for you. Do you have any equity in your home? She said, oh yeah, a couple $100,000. I said, wow. Do you have a home equity line of credit? She said, I think I do. I don't really use it, but I have one. I said, let me ask you a question. If you loaned us money out of your home equity line of credit at 4%, and I pay you 14% on that money, you'd actually clear 10% loaning me money that's not your money. She became a private lender not using actual cash, but using the equity in her home. We agreed to make her minimum monthly payment of $350 a month, and then we in turn paid her, at that time, it was 4 points and 14%. That was the going rate back in 2008. And so that started that relationship. I'm happy to say that to this day, she is still a full-time investor with us. And not only does she have her home equity involved, they have their investments involved, their cash and their kids' cash. That money that she made allowed her kids to go to private school, just from the extra $10,000 a year she was making from that investment. So it's important that you educate people on where they have money. See, some people do have money in savings, and they usually know where they have money in savings. The next is they have money in the stock market, and they don't want to be in the stock market, or maybe they have it in a money market account because they've cashed out of stocks because the market is crazy, right, at that time. Then you have people that have retirement accounts. Other areas that people have money they can invest. Obviously, if they have cash in a savings account, they know they have cash and they want to invest that money. There are some people that you have to educate and say, did you know you have money available to you? For instance, they may have a life insurance policy that has a large cash value. They can borrow against that at a very low interest rate, and with the higher interest rate that you're going to pay, they could be a private lender and make money on that. There are certain retirement accounts that people think are locked up, and though they might be, there are many of them that can be transferred to what's called a self-directed IRA. We'll talk about that more in future videos. A self-directed IRA is an IRA that doesn't have to be in the stock market, because traditionally you think of an IRA as being in the stock market, right? Well, there are companies that will provide the protection from the IRS, and they'll make sure you stay compliant. They are third-party fiduciary companies that you can establish a self-directed IRA with, and then those investors can then direct that money to you as the borrower. Great way to borrow money from people that didn't think that they had the money to become a private lender. And they can make more money and have stability and know they're helping someone they probably know and maybe they love and care about. There's another small subset I want to talk to you about here, and it's credit cards. Now, in other videos that we do, we talk about how you can use credit cards as a source to get money. Did you know you could actually have private lenders that loan you money off their credit cards? If you have what's called gap funding, meaning a smaller amount of money that you need, $5,000, $10,000, maybe for repairs, or maybe something popped up on a house you weren't expecting and you need to get some money, your friends or people that you know could actually do a cash advance on their credit card. They could have paperwork to protect them. You sign a promissory note, and you could actually borrow money from them, make the credit card payment, and let them become a private lender on a credit card. So there's a lot of options. I just would encourage you, as you are building your private lender base, to be open to all different ways to fund your property and all different ways to teach people how to become private lenders so you're never out of money. Are you liking this video so far? Have you learned anything that you didn't know that you needed to know? I hope so, because that's my goal. If so, do me a favor and please like and subscribe. And if you have any questions or comments, please put them down here below, and I'd be happy to make a video and answer your questions personally. One of the best parts about having a private lender base is that once you do a couple of deals with a private lender and they get used to how professional you are and they see that they get paid on every deal, do you know what happens? It gets so easy to get money on future deals, because all of a sudden you just send them a text and say what you need, where to wire it to, and they wire the money. Once they're used to your process, it becomes that easy. No more applications, no more having to show financials. It becomes a piece of cake to get money as long as you do it right and build a solid reputation. You know what else happens? I can speak from experience. You will have people that seek you out to invest money with you. Some of your investors will also have friends who want to invest with you. And also, if you do any kind of social media, people will find you. We have several investors with us that I've never met face to face and some that I've barely ever spoken to. But they wire money to us for our deals and they trust us because of our reputation. So I'd encourage you, as you start building your private lender base, to always be a person of integrity and always make sure that you pay your lender what they're due, even if you lose money on the deal. Because if you make sure that your investor is whole, the investment that you make by paying that investor back, even if you lost money, means they'll stay with you forever because they know they're always going to get their money back. So now that you know why private lenders are important and now that you know kind of who they are, let me tell you what we did to find them. And hopefully you can do the same thing for yourself. Sit down and make a list of at least 20 to 50 people that you know that you think might have funds or that you think might know of other people. Now, remember, people that have money don't always talk about it. Many times the people that talk about it don't have any money. But the people that don't talk about it are the ones that usually have money. And remember, they probably have money that they don't know they have. It could be in home equity. It could be retirement. It could be actually in cash or in the stock market or currently in other investments. So make sure that you look over your list and decide who you think might have those qualities. For instance, you may look down and see, okay, here is my Uncle Larry. And Uncle Larry worked for the state for 30 years. You know he has a pension coming in. Well, he probably has a decent retirement lined up because they were gainfully employed for many years. Or you know that you have an Aunt Sally who has a beautiful home that they had paid off many years ago. You know, there's equity there. And though she may not have a lot of cash to invest, she might want to do it with her home equity. So there are a lot of people that you may have to educate. So don't discount anybody on your list. After you make that list of 20 to 50 people, I want you to write their names and I want you to write their addresses. And I don't want you to prejudge who has money and who doesn't because we're not going to ask them for money. You heard me right. We're not going to ask them for any money. And here's how this works. I'm going to recommend that you put together a nice packet, just a simple brochure, kind of explaining who you are, what your goals are, and what you want to do with your business, and why you're going to be able to pay them a higher interest rate. We'll talk about interest rates in just a minute. But first, I want you to tell them who you are, what your goals are, and if you've ever done any real estate deals before, by all means, put pictures of before and after and your financial numbers inside this packet that you make. Don't skimp. Make it a nice packet. Don't print it at home. Have it bound professionally so it looks really nice. And then I don't want you to ship it out via regular mail. I want you to Federal Express it. Why? People open Federal Express packages, don't they? They don't open the mail. When it comes to Federal Express, a little more serious, right? There's going to be a cover letter. And the cover letter says this: Dear so-and-so, I've recently started a real estate investing business and I'm looking for private lenders. We're willing to pay 10% on people's money and it's guaranteed and secured by real estate. It's even insured because we get insurance on the property. The packet inside explains exactly what we are, what we do, and how investors can make such great returns secured by real estate. Here's the key paragraph. I'm writing you because I think you know a lot of people that might have interest in this. So if you would, please refer them to me or feel free to send this packet to them. By the way, if any of them choose to invest with us for these higher rates, we'll pay you a 1% finder's fee on the initial amount that they invest. So in other words, if somebody invests $200,000 with us, we'll pay you a $2,000 finder's fee just as a way to say thank you. I appreciate you taking the time and please feel free to give me a call if you have any questions. And that's it. Now, the secret to using this method is very simple. You didn't ask them for any money. Why? Because what happens when somebody approaches you directly? What is our immediate response? If you ever walk through a mall and somebody walks out of one of those little kiosks and they have a little perfume and they walk up and say, "Hi, would you like to try this?" What do you say before they get the word try out of their mouth? "Hi, would you like to try it?" "No, thank you." They could be handing you a brick of gold, but we don't wait long enough to hear it because all of us say no. That's exactly what happens when you ask people for $200,000. The immediate response is no. And they also have no idea they could be investors. Inside of your packet, I want you to lay out all the different ways that somebody could be a private lender to educate them on that process. Now, what happens is this. Every now and again, one of those people will call you and say, "Well, how about me?" You see, it wasn't a direct approach. I call it the side door approach. And it works very well. How do we know? Because back in 2007, Amber and I did this with about 25 people. We sent out the packet and a lot of people said no. And here's another secret. Make sure that you follow up. Give them a call and say, just wanted to make sure you got my packet. And if they say, oh, I'm not interested, say, no, yeah, I wasn't asking if you were. I just want to know if you knew anybody. And leave it at that. Don't try and talk anybody into it, right? Leave it very simple. And with those follow-up calls, it will start some conversations. And some conversations are going to say, well, that's great. What are you doing? How does that work? And that's your job, to start planting the seeds of faith in other people. People don't necessarily want to give you money if you're brand new. However, some people will. Your job is to find the people that will through your list of contacts and through their list of contacts. So make sure you follow up with a phone call. Using this very method is how I landed my biggest investor, who we still have to this day. You see, I sent out a packet to someone I hadn't talked to in a couple years. And he knew me from a former business relationship. And when he received it, it was right during 2008, and he had just panicked and cashed out of his stock market retirement that was $800,000. And when he cashed out, it was a little over $400,000. He panicked and sold off his stock. When he received my packet, his first response was, what the hell is this you're doing now? What is this thing? And I said, well, listen, if you know anybody. He said, well, what about me? I said, well, I don't know. I didn't know if that was something you might be interested in or not. And he said, well, I might be. And so we started talking. And long story short, I asked him to invest in one deal. And by the time we got his money converted from his current IRA into a self-directed IRA, it took about 30 days, we had bought 2 more properties. He funded my next 3 properties over $400,000. And today, he has well over $1 million invested with us, with his family, and he brought us several $1,000,000 more from his friends and people that he networked with, because he got that referral bonus. So don't discount the value of doing a letter to find these people. And the last thing I want to tell you about this is you have to stay the course. You see, a lot of people will receive that package and then sit back and wait to see what you do. I picked up several more investors a year later when they saw how well we were doing. So make sure that once you start down this road, stay the course, because you've planted seeds, and those seeds sometimes need to grow. People want to see that other people are being successful working with you, and if they do, they'll join you and your business will grow. So once you have someone that commits and says, sure, I'll be an investor with you, what is the process? It's important for you to have your process laid out and ready for them so you look organized. The process is very simple. You say, I'm going to bring you a property that I'm going to purchase. Now, here's the beauty of a private lender. Depending on your relationship, I'm going to recommend that you borrow not only the purchase price, but the renovation costs up front. Hard money lenders will make you borrow the money for the purchase price while you put some of your own money in, and then you'll get the other money in draws, meaning as you complete certain levels of the renovation, then you will get money. The problem with that is that it can cause cash flow problems, depending on your cash situation. So I'm going to recommend with a private lender that you literally borrow the purchase price and the renovation cost and some miscellaneous costs up front, so you no longer have a cash flow problem in your business. So you'll present the deal to them. I want you to bring pictures of the house. I want you to bring any stats on the house, your plans with the house. I recommend you show a scope of work that you've put together. You can learn that in other videos from us. And then show them that you are organized, and show them what your estimated return on their capital is going to be. If you're going to hold their money for 6 months, what does that look like? So I would propose keeping your rates at least 10% in this current market. It might be 12, it may have to be 14. Some people might take 8. The beauty is there's no regulation on this. It's really dependent on how much you want to pay the private lender. Now, 10% is a pretty normal amount. Whatever amount you use, you want it to be more than they're currently getting. If they're getting 7% in the stock market, you better pay them 10. It has to be worth their while to jump and come to you. If they're borrowing money from a home equity, or they're borrowing from a stock portfolio, or if they're borrowing from a whole life policy, you have to make sure that there's enough meat on the bone so that after they pay their interest payment, they're still making money, because they have to pay tax on that money as well. Let me drill down on what the 10% means if you choose to give 10% as an interest rate. Some people think it's 10% of the total amount of the house. Some people think it's 10% of all of your profits. It is not. The 10% is an APR, or an annual percentage rate on the money. So for instance, to keep the math simple, if you were to borrow $100,000 at 10%, well, 10% of $100,000 is $10,000. That would be paid over the course of 12 months. So if, for instance, you only use their money for 6 months, at 10%, Again, for the full year, it would be $10,000. If you borrow the money for 6 months, you're paying $5,000 in interest to that lender, not the full $10,000. A lender is going to ask, what's in it for me besides interest rates? We want to talk about security for the lender. Here's what it is. You're going to have a mortgage and a note, right? A mortgage is a legal document that ties the mortgage to that property. So you cannot sell that property without paying off that note, just like a bank mortgage. The note describes exactly what the terms are. Whatever terms you negotiate will be in that note. And here's the beauty. There's also an insurance policy you're going to take out on the house. When you take out that insurance policy, I want you to name the lender as an additional insured so they get notification if anything happens, and they also are going to be guaranteed to get paid out if something catastrophic happens to that property. These are the ways that you can guarantee that loan. Now, some private lenders might ask for a personal guarantee, but again, these are not savvy investors who know anything about real estate investing. They're just folks that have a little bit of extra money laying around that they want to earn more money on. So they may not ask you for that. Hard money lenders, however, they will ask for a personal guarantee. So working with private lenders, that shouldn't happen. So I hope that helps you understand more how private lending works and how you can set up your own private lender base. All I can tell you from experience is we would not have done over 1,000 deals and have funded something around $100 million worth of business with our private lender base. Again, that's using the money over and over and over again if we didn't have a private lender base. As you flip houses and as you continue to build private lenders and as you continue to do it right with integrity and make sure they always get paid, you will start to build a private lender base. You'll go from having $100,000 to $500,000 to $1 million to $2 million, $5 million, or $10 million or beyond based on what you do. It's a building process that will pay you for the rest of your life. For Amber and I, getting a private lender base was an absolute game changer in our business. We would not have grown as fast as we did if we hadn't have built that private lender base. I want to teach you more in depth how to do this, so I want to invite you to come to our next home flipping workshop. You can go to homeflippingworkshop.com. We have 3 days where we dive into how to find, how to fund, how to fix, how to flip, how to hold, how to structure your business, and so much more content. Live, very interactive, and we have a great time doing it. And we educate you on so many more things than just private lenders, but we do cover that also. So now that you learn how to fund your deals with private money, you might be saying, but Glenn, how do I find the deals to fund in the first place? Well, good news. We have a training video right here where you can learn how to find off-market motivated sellers. And then you can use your private lender base to fund those deals. Hey, thanks for watching. Make sure you like and subscribe, and we'll see you on the next video.